Hello my fellow freedom builders and welcome back to the channel. It's time for the weekly update on our swing trading and option trading. And well, we had a reasonable week, but then a drawdown here Friday. So all in all, if we look at the positions, you can see that in our swing trading positions we have, what do we have? 1, 2, 3, 4, 5, 6, 7 trades here. And all except one, the Cisco trade here. Oh, sorry, there's also the tapestry here. But they are fairly nicely in profit, and I'll just run through them quickly. We can see that we had our largest drawdown so far. That is, could I say, ridiculously low. That is 0.8 or 0.76%, something like that here. We have an overall return of 3.62%. That is, of course, in a market that has gone up about the double. And I think I can safely say that the market will not keep, meaning the S&P 500 will not keep going up by 7% every 5 or 6 weeks. So that would make the S&P go up something like 50 or 70% in a year, something like that. That is not going to happen. So one of the strengths with the swing trade is that we often get out when it starts to tip down. Then the market can go down further, and at some point we will see a drop in the market at 5 or 10 or even 15%, and at that point we will not take quite as large a loss as the S&P 500. So having a quick look here, we can see at the monthly we had about break even now for July. We had a good June, and May we just started up at the end of May. So we will just, right now we only have 1.5 month of data, so we can't really use the stats here for much, but you can look at the Sortino and the Sharpe ratio. I did a video about them a week or so back, and you can have a look at them. These are some of the metrics I'm looking at. Could I stay at a Sharpe at 3.42, I would basically become the richest man in the world. So this one is not going to be at 3.4, as with the market is not going to stay at 5. That is for certain. One of the reasons why I put some extra trades in here, the trades that I showed you last Monday, I only had one I didn't take. That was the DRI, I think it was. I can show you that in a second. But the reason why I put some extra trades in here is that the S&P 500, first of all, it is in a good long green trend. It started that back here. We can have a look at that. Here, the good green trend started this year back in the 13th of January, went a bit into red, green, red, and then it has stayed in red, in green for quite a while on the long-term trend down here. Now, what I did look at last week was that the S&P 500 had got into accumulation oversold phase here, which means there was a good chance that the S&P 500 would go up. And it did. It actually did go up quite a well. I could, of course, just have bought the S&P 500, but now this is a swing trade portfolio. So I loaded up on the stocks in the portfolio. And well, for now they are about break even, but let's have a quick look at them. We had the Valvoline here. That is going up nicely. Was a bit down Friday here, but it seems like the buyers were coming in. There is plenty of time until earnings. If it goes up here somewhere, I might just take it off before earnings. I don't like to stay in too many swing trades over earnings. Then we have the Garmin trade. Also had a red day at 0.8 here on Friday, but as you can see, I really like the candle that it is producing here. Sellers came in and then buyers came in, and even if we look at it at something like an hourly chart, we can see here that sellers came in and then buyers pumped it up over the day here. So I'm fairly confident this one can keep going up. Then we have the CGI, had a good day here, keeps its uptrend. That is something that if it keeps going up, maybe 1 or 2% more, I'll take it off before earnings here. We had the Broadcom. That was a bit of a different picture. It was up Friday and then sellers came in. I'm not too worried. The trend is still up. It broke up from this triangle formation here. So coming down here, finding a bit of support before it pumps up wouldn't be too strange of a thing. Then we have the Cisco. I bought that. That is one of the stocks that I have in a negative right now. It hasn't broken the stop loss, but it shouldn't drop much further before I kill it off. Then the setup for the swing trade is simply over. However, this was a bit of a doubt candle on Friday. It was up here, but it was also down here. So it landed straight in the middle here, almost where it started. But of course, it was a gap down from up here. But let's see what happens. There are a lot of time until earnings, so there is some room for some move upwards here. Then we have the Capital One Financials. Had a kind of a bad Friday here. And the reason why I say that is that this is actually what is called a bearish engulfing pattern. It engulfs the entire green candle before. So I'm not too comfortable with this, and there are only a few days until earnings, so I'll have a look at it in the beginning of the week, and if it keeps going down, I might just take it off. Then we have the Tapestry here, also one that went down for a couple of days here. Again, I'm not too concerned about it. There is a reasonable area here of accumulation here with a lot of trades going on. So coming down here, taking a bit of finding its strength again and then pumping up would definitely be a possibility. Let's see how it goes. If it keeps dropping through this accumulation area here, I might just sell it off. So again, I'm not afraid to take a loss on any trades, and as I mentioned a while back, you should not expect me to keep making 5 out of 6 trades in profit every time. There will definitely be more losers. However, what I am looking at is the statistics. I do like to see a win rate above 50 or 60. Right now we have 72% win rate, which is very high, meaning that we have 3.3 times as many winners as losers, so that is great. We can also see that the average profit and loss right now is 2.7% per trade, and we can see that our winners are about 4%, our losers are about minus 1.4%. If we could keep these stats, having our winners be 2.5 times the losers and having around 75% winners, that would be just outstanding. But I do not expect to keep these stats here. That is because we have started this experiment in a very, very bullish market. That will, of course, give us a retracement at some point, which will always also make our max drawdown larger. All right. As for the option trades, I actually closed them both. I could get out of the LEN here at a very good profit. Actually, the options were going straight in my direction, and the volatility helped me quite a lot. So I actually got a bit more out of this trade than I expected. And then the Biogen here. Well, as you know, there was expiration date here next Friday, and it was just hovering around the 280 where my strike price were, and that means I could get out at just at a very small loss, 0.3-0.4% or something like that. So I took it off, and then when I added it to the Leonard trade here, altogether these two were some very nice profits. They were meant to run for something like 40-45 days, but they ran significantly shorter, so my monthly percentage performance was actually very good here. All right, tomorrow I will get you a video with some new swing trading candidates, and then Tuesday and Wednesday I'll give you some videos, as I mentioned in my last video, where we're having a look at Netflix and Tesla in 2 separate videos, where I'm looking at a short, mid and long term view where we should consider going in, and if they are good investments on the 3 time frames. So that is what is coming up, and of course on Friday next week I am making a summary of how the earnings season have fared so far. And that is very interesting to see if the earnings can keep beating the expectations. All right, that's all for now. Enjoy your Sunday, and until I you hear from me next time. Take care of yourself and your money out there, and I'll speak to you shortly. Bye.